Welcome back, traders and investors. We have our final guest on today, and that is Larry Doyle, author of Sense on Sense. Larry, what kind of plans you have for Labor Day?
You know what? We've got a lot of stuff going on. Some family activities. This time of year, kids are moving, so we're shuttling one of my sons from the east side to the west side of Manhattan, and but the big thing is kick off to the college football season.
Exactly.
So lots going on, and very excited, and fabulous weather. So hopefully everybody has a good weekend.
I'll be at that Michigan game tomorrow, so I'm looking forward to that.
There you go. Go Big Blue.
Okay, so Larry, I mean, we don't talk a lot about interest rates on this show, and obviously, this entire rally has been fed by the Fed and
Yep.
the quantitative easing, and boy, it looks like, the way Janet Yellen's doing that double speak here, it doesn't look like interest rates are going up anytime soon. I don't know how much lower they can go, but what's your current take on interest rates?
Well, what's interesting is the U.S. is kind of in the mode of winding down its QE, via the tapering. I mean, who's getting ready to? It appears start ramping up QE. The folks over in Europe. I mean, this is really. I mean, as much as people are saying, why is the U.S. bond market rallying so much? Honestly, I think it's rallying in sympathy with what's going on over in Europe, where you're seeing a decided slowing in their economy. You're seeing real threats of disinflation, if not outright deflation. The spread actually between European government bonds and the U.S. bond market is at the wides of the last 7 years. I mean, so here we are. People are saying, is there any value in a U.S. 10-year Treasury at, wherever it is, 2.34, 2.35%. And in my opinion, it's really not about value, but it's, about technicals. And we're rallying in sympathy. And if the EU is going to start ramping up some QE, and they actually just recently announced that they've engaged BlackRock to help them, figure out, okay, how exactly would we do this? I think that's going to keep our bond market well bid, and as a result, it'll keep the Fed, in my opinion, on hold, lower for longer, and as a result, that provides support to the equity market.
All right, so QE is, it's a policy that, has been used sparingly, by different federal banks, or we have the Federal Reserve Bank. Do you think it's going to have the same effect over in Europe? I mean, we have, different economies and stuff. Do you think that it's going to have the same desired effect that it's had here?
I mean, honestly, I'm not a believer that QE has had a meaningful effect. Certainly on our labor markets, and to a lesser extent our economy. And what it's done is it's just it's helped prop up asset markets. So for those people holding assets, QE is a dream come true for everybody else out there trying to find work, meaningful, high-paying jobs. Those are real structural issues, and I don't think QE is the fix for that. I mean, so how will QE work in Europe? Well, again, you know what? I mean, you got a 10-year German bond trading at 90 basis points. Keep the game going, I guess.
Have you looked at the stock of Deutsche Bank lately? I mean, that stock is just, considering to what the U.S. financials have done. I mean, you're getting a little uptick here over the last few days, but it doesn't seem like anybody's jumping for joy over here over Deutsche Bank.
Well, you know what? I mean, there's obviously a lot going on inside a lot of these banks. Deutsche Bank has had a number of issues. From both a regulatory standpoint and otherwise. So, I think that's a specific situation to Deutsche Bank. But, again, let's not lose sight of the fact that there are enormous risks in the world currently. The risk profile of the global economic landscape is pretty enormous. I mean, what's going on over in the Ukraine? I think people would say, okay, how much is that really going to impact the U.S. economy? Probably not that much. But I'll tell you this, it certainly will have an impact on the European economy because, Russia is, a major trading partner for many of the European countries. And as Europe goes, you know what? The U.S. too isn't following in lockstep, but it's certainly headed kind of in that similar sort of direction. So again, I think all of these things give reason to pause for anybody who thinks that the Fed might be easing in the first 6 months of 2015. I just don't see it.
Oh no, I don't
Easing,
think.
tightening rather. Tightening.
Okay. No, I think they're going to maintain a steady course here as long as they can. So you run the DM Income Advisors for tax exempt income. So I just telling them just to hold steady with their investments. Or you doing any?
Very much so.
Yeah.
Very
Okay.
much so. We are constantly, assessing credit quality, protect, looking for solid credits, and basically, clip coupons. And just let the positive carry work for us. I mean, these are not really trading vehicles, but when we find solid tax exempt municipal credits, north of 5, if not 6, approaching 7%, and we get to know both the management and the operations of these entities, which kind of run in the space of charter schools and senior care facilities. Those to us are, outstanding value. On a pre-tax basis, you're upwards somewhere between 8 and 10%. But again, what's happened is the muni market has gone from a commoditized market to a credit-specific market. You have to have the acumen and the insights to understand, who exactly are you doing business with, because you can't just buy this stuff blindly.
Did you get caught up in the Detroit bankruptcy at all?
I'm a fan of some of the Detroit teams, but I typically we try to stay away from purchasing any GOs or even revenue bonds out in the great state of Michigan.
Is that go to other municipal cities as well? I know
Yeah. Again, our business, we're really not in the trading business per
Correct.
se, where things get overdone because mutual funds dump some bonds, and then there's a play there. We will allow other entities to do that, but again, we really don't even play in the GO space. Because the idea of just trying to when you take a hard look at some of the the fiscal conditions of these cities, states, and towns, it's like, good God, are you kidding me? And it's all predicated on the taxing authority. But then you also get into the legal situations in which, who's going to get, bondholders might think that they're, in first position, but then the pensions in the unions, they get up in arms, and before you know it, you end up in court. And I think one thing that we've learned is, through all of this thing from an investing standpoint, Uncle Sam really is not a good partner. He may be good from the standpoint, or the Fed, people certainly like the Fed and the QE, but, you look at, creditors from whether it was GM or elsewhere, or even in these mortgage settlements with these large banks. Significant percentage of those mortgage settlements, it's not coming out of the, Bank of America or J.P. Morgan. It's coming out of the mortgage investors' holdings. That has gotten very little, airtime. So investors and taxpayers are picking up, large parts of those fines.
Okay, final tips for investors here, whether they're in the fixed income, tax-exempt income market or just in equities. What's your appraisal? Market just made new all-time highs in the pre-market session here. Any final tips for our investors?
You know what? Tips, keep some powder dry. I honestly don't think this is just a, close your eyes and buy them. Keep your powder dry. We just had, about a 4% pullback or thereabouts in the equity market. Earlier this summer, again, it rebounded. You hate to buy the market as it's making new highs. At least I don't. You want to be a little bit more disciplined. And so I'm in the camp of, if we're getting pullbacks either in interest rates or in equities, you know what? You can stick your toe back in the water.
Okay, Larry Doyle, author of Sense on Sense and also longtime associate at DM Income Advisors. Larry, thanks for coming on and talking some sense into us, and we hope to have you on again.
It's total pleasure. Have a great weekend.
Okay, you too.